Access to credit is quite limited in Africa. Small and medium enterprises and most of the poor population in sub-Saharan Africa have very limited access to credit, as only about 5% of adults got a loan from a bank in the past year. As we have already said, in Nigeria, only about 2% of adults have got a bank loan. One reason for this is that the government and big oil companies are literally crowding out the market. The banks are apparently giving out loans, but not to the average small and medium enterprise. If access to capital is improved, the private sector can become more robust in the ability to engage these otherwise free radicals. The ultimate solution to poverty, unemployment, and economic stagnation is a healthy, growing, and competitive private sector, where the real GDP growth rate is closer to 10%. However, the private sector will not be able to grow without structural changes and systemic enhancements. But there is a problem. The interest rates out there are simply too high. If a microfinance bank is charging 30 to 40% in interest rates, this means that the young company must have a rate of return much higher than this to stay in business. There are not many businesses that provide such returns. There are people that say that market access is more critical than interest rate. In today's global marketplace, charge these people 100% interest rate and see if they can, like a piper, keep their tune for very long. If we want to build our private sector to become more robust, keep our cost of doing business down, and be globally competitive in trade, then interest rates must come down, especially among microfinance banks. Yes, microfinance banks must look to get savings from their customers and depositors in order to secure lower borrowing rates for on-lending. However, this will take some time. What has to happen now is this. Across the three tiers of government, we must create a microfinance fund amounting to at least 1% of the budget. We have to do this if we want to rebuild our private sector and create jobs. Now, some states have shown strong commitment to microcredit and should be commended. However, states should not lend directly to the people, as they are not banks, and there is a moral hazard in repayment to the government. The government should simply lend to the microfinance banks at no more than a 3% interest rate, and for a term of not less than 10 years. They would in turn only lend at below 10% to targeted sectors determined by the government, and not to persons or organizations. This would be a good thing for the economy and should happen in every budget cycle. Indeed, special purpose loans may also be secured from donors by the government for on-lending through microfinance banks. Microfinance banks and institutions are pivotal for building our private sector and raising our level of living. I'm Kpakol, and that's my view.